Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, as you all know, today is Monday. It's the beginning of a new week, and also going forward. So, this week started strongly with quite a number of surprises. One of the biggest surprises we have seen in the market so far is oil jumping up 7.2% at the market open. So as you can see from this chart, there was quite a literally huge gap from the closing price on Friday and the opening price today. And this was as a result of an announcement that was made over the weekend, that is on Sunday, where Saudi Arabia and other OPEC+ countries decided to cut oil output by over 1 million barrels per day. So more on the story is available here on this particular article. So just a moment. So OPEC+ countries announces surprise oil output cuts. So this was major market moving news, and we'll be expecting more developments on this. So on Sunday, Saudi Arabia and other OPEC+ oil producers on Sunday announced further oil output cuts of around 1.16 million barrels per day. So this is not the first output cut. We were experiencing a series of other cuts that were implemented last year, but now with the newest announcement, we expect tighter supply of oil in the markets. So the pledges bring the total volume of cuts by OPEC+, which groups the organization of the petroleum exporting countries with Russia and other allies, to 3.66 million barrels per day, according to Reuters calculations, which equal to 3.7% of global demand. So when you see the oil producing countries cutting output by 3.7% of global demand, then the overall expectation is one, oil prices skyrocket or they run higher. And on the other hand, you expect that they are responding to a much slower economic activity in the global markets. So when production across the world goes slow, then the overall interpretation is that there is lower demand for oil. And in order to maintain good margins on oil exports, then the OPEC+ countries are expected to cut production and maintain high prices. So in this case, the expectation is that we'll be seeing oil prices beginning to recover. So Sunday's development comes a day before a virtual meeting of an OPEC+ ministerial panel, which includes Saudi Arabia and Russia, which had been expected to stick to 2 million barrels per day of cuts already in place until 2023. So this was the previous agreement, but now they have added about 1 million barrels per day. And with this new adjustment, then we expect further pressure to move prices even higher. So the size of cut is as follows. The biggest cut is coming from Saudi Arabia, which will be cutting its output by 500,000 barrels per day. The UAE will be cutting by 144K, Iraq 211K, Kuwait 128K, Algeria 48K, Kazakhstan 78K, and Oman 40K barrels per day. So with all this happening, then the expectation is that prices will continue to rally. And as you can see on the chart, we had what was our inverted head and shoulder pattern. I remember mentioning this in previous sessions. So after the market broke last week, it basically traded sideways for 4 straight days, 1, 2, 3, 4. Slight upward momentum, but then eventually we had the rally we were expecting. So after the formation of the pattern, our target price was $84.1 per barrel, which was previously resistance level. So the idea here was generated by the bottom pattern. So the distance from the head here to the neckline would be expected to the same distance as the breakout. So in this case, the market broke all the way up. We had an upper trend line on the 4-hour chart that had been holding very well. So you can see the upper trend line here, and clearly from the price action here, you can see that the market managed to jump very well, break that trend line and pull back to retest the area. and now it seems to be continuing. So after opening at this very high price of around, this was $86 per barrel. So this was the highest price we saw this morning. Sorry, 85.8. So price pulled back down and now is seemingly making a recovery. So we could be expecting to see some further upside in oil prices today. So how far this can go, there's quite a number of points that we can depend on. One is the previous resistance, which worked very well here, also worked very well here, and also in this scenario here. So we could be seeing oil prices rally again, in this case to 86.6. And if they happen to be even stronger than that, then $90 per barrel could be a nice target. So this remains one of the key trading opportunities for the day. And now, besides that, I would like us to focus on the economic calendar and what we are expecting to be seeing in the markets this week. So let's jump straight to the economic calendar. So early this morning, we had Tankan Manufacturing Index for Japan, which came in at 1.0. Previous reading was 7. So any reading above 0 is considered as positive or expansionary. But as you can see, the trend is not going so well for Japanese manufacturing. It's moving towards contractionary direction. So the Japanese economy is not very healthy when you consider the manufacturing sector. However, the services sector or the non-manufacturing index recorded 20.0. As I mentioned, any value above 0 is expansionary, meaning that the services sector is doing reasonably well, whereas the manufacturing sector is not doing well. So services are quite strong in Japan, but manufacturing needs something to be done for it to not to fall into contractionary zone. So we have a bank holiday all day in China. Final manufacturing PMI came in lower than 50. 50 is the medium level. Above 50 is considered as expansionary. Then we have Australian dollar MI inflation gauge, which came in at 0.3%, slightly below expectation, but well within what was expected. Building approvals came in at 4.0%, way lower than the expectation of 10.4%, meaning that the construction in Australia is slowing down. Retail sales came in at 0.2%, well in accordance to the previous reading, as well as the expectation. Then we had the Kaizen manufacturing PMI, which came in at 50.0, indicating some weakening or weakness in Chinese manufacturing. This is not good. Remember, we were betting on a strong oil market as a result of a strong Chinese growth. So if Chinese manufacturing is slowing down, then demand for oil could also be slowing down. So commodity prices year over year in Australia were down negative 9.1%. This was a good indication. And then the CPI for Switzerland came in at 0.2%, which is much slower than the previous reading, as well as the expectation. So in this case, we expect the Swiss National Bank not to get very aggressive with rate hikes. So for the day, we'll be having more data, manufacturing PMI for the Eurozone, for Swiss franc, and also for GBP later in the day. Before we also look at the OPEC JMMC meetings. So this meeting will be very important. It will give directions on what to expect for the quarter, and also to see whether there will be more data about oil outlook in terms of demand as well as the supply dynamics. So the OPEC Plus meeting might cause volatility in oil prices. Then later on, manufacturing PMI for the US, as well as BOC business outlook for Canada. So the most important data for the day will be the OPEC Plus meetings and also the US ISM manufacturing PMI. So as we head on to Tuesday, we'll be having interest rates coming from Australia. So this will be very important. So in the previous reading, they hiked rates to 3.6%. So we expect another 25 basis point hike, which would push rates to 3.85%. Then later on, we'll be looking at JOLTS job openings, still on Tuesday. Then on Wednesday, we see New Zealand interest rate data. So in the previous reading, they hiked to 4.75%. So we expect another 25 basis point hike to 5%, and this could cause out of volatility in New Zealand dollar pairs. We look at the BOE quarterly bulletin. This will be on Wednesday. ADP non-farm employment change. Then the ISM services to conclude Wednesday. Then on Thursday, we'll be having Canadian job data, that is employment change, unemployment rate, as well as unemployment claims for the US, before we look at the IV Purchasing Managers Index at 5 p.m. So then on Friday, we'll be having a sequence of bank holidays for New Zealand, for Australia, for Switzerland, for the UK, the Eurozone, that is Germany, as well as Canada. So whenever there is bank holidays, we expect a slow movement in the markets, and trading opportunities tend to be more technical than fundamental. Then we look at the non-farm payrolls at 3:30 p.m. on Friday. So that's it for today. We know that it's the non-farm payrolls week, so a lot will be focused on what investors are expecting in terms of the US job market. So in the previous reading, there was an increase of 311,000 jobs. So in this case, we expect that the US economy created 235,000 jobs in March, and unemployment rate is expected to remain the same at 3.6%. So average hourly earnings are expected to accelerate from the previous reading of 0.2% to a reading of 0.3%. So that's one of the most anticipated news for the week. So besides these, there's also news that Japan is bypassing Russian oil sanctions. So this was reported earlier this morning. So Japan breaks with the US REs, purchases Russian oil above $60 a barrel cap. So there was a cap that was implemented late last year, where Western nations had agreed that they would not be buying Russian oil at any value above $60 per barrel. However, Japan has reported that it bought more oil at even higher prices, and now it seems like the sanctions are beginning to crack. So one of US closest REs in Asia, Japan, has begun purchasing oil at prices above the cap of 60 a barrel, as reported by the Wall Street Journal. According to the report, Japan got the US to agree to the exemption, saying it needed it to ensure access to Russian energy. So the concession shows Japan's reliance on Russia for fossil fuels, which analysts said contributed to a hesitancy in Tokyo to back Ukraine more fully in its war against with Russia. So after Western sanctions, many European countries weaned themselves off Russian oil in response to the invasion of Ukraine. However, Japan has stepped up its purchases of Russian natural gas over the past year. The report said that Japan is the only group of 7 nations not to supply lethal weapons to Ukraine, and Prime Minister Fumio Kishida was the G7 leader to visit Ukraine after Russia's invasion. He was the last. So the oil purchases, though tiny and authorized by the US, represent a break in the unity of US-led efforts to impose a global $60 a barrel cap on purchases of Russian crude oil. So we'll be looking at more developments on the story. That's it for today. Now that you understand the 2 big stories and what you're expecting on the economic calendar, hopefully we'll be getting some good trading setups for the day. So good morning, Conrad. Morning, Sue Jones and Charles. Kindly take a look at how to prepare for abrupt change in trades chart when you expect news. What's your view on the gap created at open on Brent? Market always fills the gap before proceeding with previous move. No, it doesn't always work like that. When you are trading and the market forms a gap, especially as a result of fundamental news, the market doesn't always close the gap. So there are some charts where you'll see a high, let's say, statistical probability, where the market often closes weekend gaps, meaning that the market moves in the opposite direction, closes the gap before doing something else. However, as for Brent oil, the main reason we are seeing the big gap is as a result of the announcement of oil output cuts. And this is purely fundamental, which means we expect some further upside on oil prices. So if this happens, then there's a good chance we'll not be seeing oil markets closing that gap anytime soon. So hello, Ivy and Rodney. Welcome to the session. View on cable and Euro USD. Hello, Forex Profit. Thank you for joining the session. So as per technical analysis, I know I didn't do much today. I just mentioned potential position here on oil. So if you look at the major pairs, they all lost to the dollar on Friday. So we could be seeing some recoveries happening today. So for pound USD, notice how the dollar was very strong on Friday. And now after dropping to a previous resistance level, which acted as support here, then we are seeing a very strong rebound here. So it's a recovery against Friday's price action. So potentially we'll be looking to retest Friday's high. And this is a similar theme across other pairs. So if you look at New Zealand USD, had broken out of the triangle, went back down, bounced off the lower trend line, and now it's going back up. So a potential trade towards the last high that we saw on Friday might make more sense. So it's a similar thing. If you look at Euro USD, it's the same thing. A big sell-off on Friday. Today we are recovering. So the target now remains 1.09. 276. So USD card, as you can see, it's already reversing the momentum here. So the dollar was losing to the Canadian dollar, made some recovery here, and now closed the gap that it had at the market open. And now the dollar continues to lose to the Canadian dollar. So one of the reasons this is happening is because there's a very strong correlation between the Canadian dollar and oil prices. So when oil prices are moving higher, then the Canadian dollar tends to gain. So in this case, an eventual drop to the previous target of 1.34407 remains. So remember, we have been studying this pattern for quite a period now. This is what you are tracking, the market breaking 1.36557. So it eventually broke that level, kept going down, and now we are almost getting to the target. So after the pullback that we saw here in the morning, this pullback here, it makes more sense to target even lower prices, with a target of 1.34407 being more realistic. So dollar gaining against the Japanese yen, making some pullback here on Friday. Today opening with a gap, pulling back, and then continuing to rally is indicative of the continued weakness in the Japanese yen. So as we mentioned last week, the Japanese yen is currently very weak because of the central bank policy. So we will be expecting to continue seeing a rally against the yen. So Australian dollar rallying against the yen, the pound yen are also making a recovery from Friday's price action. We could be seeing it happening with CAD yen too. Yeah, the Canadian dollar being one of the strongest currencies today because of oil prices, then this might also be a very nice asset to trade, targeting the 100.6 price level with this V-shaped recovery here. And also we have Euro JPY, which happened to be very strong last week before making some drops on Friday. So today there was a gap, crossed the gap, and then continued pushing higher. So our target of 145.524 remains viable. So while the Japanese yen is losing, then the Japanese stock market is gaining. So for Nikkei 225 index, I expect to see some further continuation or some further down upside happening here. So as for the US indices, they made some good breaks last week on Friday. So you can see there was some good breaks, but now they seems to be consolidating. So if you look at the 15-minute chart since open, there's nothing much happening here. If you look at the US 30 or the Dow Jones Index, yes, it's gaining some momentum here. And also the US Tech 100 or the NASDAQ, it's also moving sideways. So we'll have to wait for some more news in the market to fuel a momentum in a particular direction. So for now, I'm indifferent on the indices, but for the dollar, I expect the dollar to start weakening again. It's already happened in the last 2 hours. So I expect these currencies, the pound, the US dollar, the pound, the euro, the Canadian dollar, all to be making some good recoveries against the US dollar. So that's it for today. Thank you guys for joining the session, and I hope to see you on the next session.